What's up, everyone? How's it going? Welcome to today's pre-week analysis for the week of August 11th to August 15th. And I'm very excited for this week. I'm looking to see how we can do. We did end this past week in the red. And it's been quite a while that we've ended a week in the red, but once again, we're not in the red by a major amount. One or two trades, well, maybe one and a half trades could easily make up for the losses that we've incurred in this week. And remember, guys, it's a marathon, not a sprint. And that's why we're going to recoup and try to understand the things that we should improve upcoming this week, and what are some things you did wrong last week, what are some things you could have done better, and also create a overall overview for this next week just so that we are prepared. Because as you can see, we're approaching these all-time high areas once again very quickly. So it's going to be interesting to see how we react around this region. So, let's dive straight into it. The first thing I want to do is to go ahead and check out the news we have for this week. So this week is a pretty low impact news other than 2 days, and we'll go over that soon. But on Monday, we don't really have anything we have to worry about. Tuesday, we do have CPI. So Tuesday, we might, depending on how CPI moves and the sentiment gathered from CPI, we can actually leverage that to help create a bias for the day. And typically, when big events outperform or underperform by a large margin, then typically the market tends to follow. And even with those retracements, if there's clear confluence, these longs can be a very powerful tool that have been more easily leveraged because we knew the news and because we knew the impact and significance of such news. But other than CPI, at 9 a.m. we do have FOMC members speaking, not important. So basically CPI is the only thing we have to worry about on Tuesday, but it's pre-market, so we should be able to trade the session pretty easily. Wednesday, we don't really have anything except crude oil inventories, and that doesn't really affect the futures market, so nothing really you have to worry about there. Thursday, we have PPI and unemployment claims. Same like on Tuesday with CPI, I'll treat this day the same way. Just see how PPI impacts the market, how the buffer in which it outperforms or underperforms, or if it matches the market perfectly. We can use agreed and sentiment index and other tools to actually gauge a fundamental bias for the day. Now remember, there's two types of biases you can do. You have your fundamental bias and your technical analysis bias, and you'll also have your order flow bias, but those three things can sometimes diverge from each other and sometimes converge. But typically for the overall day, from the start of day to the end of day, you'll typically have a lot more luck combining recent fundamental and sentiment style news with your typical technical. You don't really want to use order flow for a higher time frame movement speculation. Simply by analyzing the news, you could probably gain a 40% win rate in terms of start of day to end of day movement, with potentially, I would say probably a 1.2 to 1.5 risk to reward, which does mean that this would likely be a profitable system. But you have to implement this and you have to leverage this in a variety of occasions. And a risk adjusted return may not be the best. You have to keep working to manage your downside risk and scale the strategy in that sense. You want a smooth equity curve, not one that looks like this. As you can see, the start and finish are going to be the same slope, but the equity curve and standard deviation is going to be a lot different. But yeah, let's get back on track with the news. Essentially, we're treating Thursday same like Tuesday. We do have at 9:30 all of these news: CB leading index, natural gas storage, but other than that, nothing really we have to worry about. Friday we have core retail sales, all of this pre-market, but during market we have UAM. So likely only 9 a.m. is going to be the time we take a 5-minute interval, only on Friday. So pretty nothing really will impact us a lot. We just have to leverage the news to our advantage. And let's see if financial juice confirms what we've seen. Yep, confirming it for Monday and Tuesday. For Wednesday, crude oil inventories flash release. We'll see. It's basically the same. It's the same. And it's the same. Yeah. So that's cool. Only real news thing that we really gotta worry about to a high extent is CPI and PPI. And also Friday's Michigan news, UOM news, simply because that's during market session. And we may be able to leverage all three of those to our advantage. But with that said, let's go straight into analyzing this week and also reviewing the past week once we do that. So let's go ahead and get started with that right now. And I'm gonna go ahead and simply move my footprint chart up to the 4 hour for now. So we can validate some early zones and levels. As you see, we have a lot of these boxes. But yeah, let's go ahead and mark our different levels that we need to. This level that we're at right now, we may be reacting towards it, but it's too early to tell, so I am gonna keep it there. Let's see if there's any absorption there. Not really. We did start to have that volume, and this was market open. But if you take a look near the top, we just saw it selling. There was nothing really showing absorption there. So I think we should be able to burst and break above that level, heading to these all-time highs. That's simply a bias I made just by analyzing this one level. But as always, we may want to spike up a bit, maybe make a retracement, and then head up to these all-time highs. Those are the type of things we can't predict, but we can leverage to make profits. Because if we move up almost at these all-time highs, make a small retracement, absorb into Bookmap liquidity, start rejecting, find an entry there, stop loss below here, take profit here. That's 1.75 to 2 RR with a pretty high win rate, 60 to 75%. Definitely something you can leverage, but you have to look at the overall fundamental context of the market, including news, technical analysis, and a variety of other things. But let's see what happened here at these lows. Once again, there's not really volume at that region, but as you can see here, it was an area where sellers got absorbed. So very aggressive selling explosion near this level, and that was the area where sellers tried to come in again, but we didn't really see much interest from these sellers, as you can see. Okay, hold on. Let's see how much. Yeah, barely any volume down at these lows. Typically on the 4 hour time frame, we get a pretty good amount of volume. Like up to 4K, 5K-ish. But there we did not really get volume, and it was post market, so nothing really we can tell from there. But since it's absorption area, it would stand. Let's go ahead and mark out. Let's go ahead and continue marking out the levels and see if there is anything. This zone and this lower level are going to be very interesting. Let's go and mark this out. 4 hour here, like such. Down here we have this level, and we have this level. That's all I'm gonna mark. Since we're near the top of this range, we don't have to go down below that range too much, unless we make some goddamn bazooka tariff news in which price dumps out of the charts, out of this entire range. In that conditions, we likely would not be trading. But yeah, just keep that in mind. So let's see how those are here on the. Let me just delete this. We're not gonna use this. We have this lower level and this lower level. We are seeing a lot of volume there, which is always a good sign. Especially around this region. With those things said about the volume there's nothing invalidating it. We do see aggressive sellers around that lower region, but what I like about this level is that we came into that 4 hour, and that 4 hour is really going to be the most significant thing over this liquidity level. We're making lots of volume down there, and if you take a look at this 4 hour, just take a look at the volume we're seeing here, right? We saw a lot of volume here, whether that be selling or buying. We saw goddamn large amount of volume there. And in the next candle, we don't see a lot of volume, but what we see is very aggressive buying pressure, extremely aggressive. This buying pressure didn't put in a lot of volume at this area. We saw a buyer imbalance towards the upside, and then we started creating volume there, but doesn't matter. We saw this buyer imbalance after large volume put in that created this demand zone that makes this a very important level. And this level would also be valid simply because of the large amount of volume we're seeing here with that 713K amount as well. Let's go down all the way to the lows. And I'm going to keep these lows no matter what, simply because it's a low of that range and it's pretty bored. But yeah, that's all I see on the 4 hour for now. 3 hour, we do have a 3 hour demand here. Three hour right there. Mark out that like that. Main liquidity down here. Not see anything up there. We do have a 3 hour down here as well. Can't really head on to the 3 hour on Addis, but we can just continue leveraging the 4 hour. Another 3 hour here. Honestly, we don't even need to check these unless price starts to head to them, and I don't think price will head to them tomorrow. So it's not really worth my time validating those zones. But we are going to go ahead and check out this zone very close by, starting at 6375.5, 6375. And if you take a look at that, right above this area is the point where we have a lot of volume being generated. So over this liquidity level, I would prefer to see a reaction off of this 3 hour, right? Because if we break below that area, maybe, but this area we're generating lots of volume within high market volume sessions, especially 184 and 566, but I'm liking this and I'm liking that 3 hour there. So definitely something to keep an eye on. 2 hour, we do have this area. Was 17. Just 5 right here. I don't know if I want to mark that out quite yet. We do have this big wick, the 4 hour, which does correspond to that, but again, not seeing much volume in there. And I'll mark it out, but honestly, it will not affect us really. Let's see, 40340. We're gonna mark it out. This was the area where we saw seller absorption prior with all the sellers. So we're gonna mark out this general area. I'm not marking out this area though. Within low volume, it's not really significant for us to worry about. Not really seeing anything else on the 2 hour we really need to mark though. And perfectly, we can mark this out as a 2 hour demand. Pretty big one, but it should be big simply because that was a big area where we saw this seller absorption occur. Maybe not all the way up there, but we do see buyers gauging in there. So it's a pretty good area capturing majority of this volume here, which is why I like it. And you can get even more precise by marking this high of the volume to low of the volume within Addis footprint. But I like to keep things on my trading view. It's honestly personal preference and does not matter that much. I'll see if this is still holding. It is, so that is pretty good. 1 hour. It was on the 2 hour though. Maybe I was on the 1 hour, I don't even know. But it doesn't matter. Still there on the 2 hour. Alright, let's see. 1 hour like right here. Not gonna mark that out. It wouldn't hurt, but I don't want to. We'll go ahead and mark it out anyways. There's gonna be a 30-minute up there. it wouldn't affect us really to mark it out. I mean, it wouldn't hurt us as well, so let's just mark it out. Why not? 30 minute right there. So, yes, did give me a pretty good insight into where I believe the market is going to move at least, right? That full-handedly depends on how we react at this 1 hour that we're testing right now, right? We've already rejected off of this 2 hour. We're coming back near view up-ish area. What I want to see happen and what I'll play off of are these following scenarios. From where we're sitting at right now, I want to see how we react to this area. Depending on how we react there, that's how I'm going to react. But I want to see a move up to these all-time high levels, and that's what I'm going to be wanting to bet on. Da, 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 da. This is going to be my main scenario, which how I'm going to play. You can capture any retracements along the way and things of that nature, but that's what I want to see happen. We may also just see a retracement down from here, and then depending on how we react there, that's how I'm going to play off. But I'm pretty bullish bias until we get to these all-time high levels. Buying has been pretty aggressive. If we're able to break this 2 hour, I don't see any problem heading up to this 30 minute, which since we already have that momentum there, we should be able to break these all-time highs. And that's what I'm looking for, and that's what I am predicting based on what I've seen here. As always, predictions are typically, it's just a prediction after all. Usually predictions are between 40 to 60% right. So you cannot really play off of a simple prediction. You need other objective information to actually base trades off of, but this provides a good deal of structure going into the trading day tomorrow and into the overall week. But given that, let's go ahead and check out NQ and the VIX, and then we're going to go into our post-week analysis, which is basically we'll review our week in like quick 2 minutes. But yeah, I'm on the daily for some reason. Hold on. There we go. Now we're going to simply just check if what we marked out on ES seems to be validated. Ooh, I forgot one thing on ES. Let's go ahead and mark out a volume profile. Do you want to see where volume is within this recent range first? Oop, I marked it up too close. Let's go on the 1 hour level. It'll probably be easier to mark it out. There we go. And yeah, we're seeing that volume generate within this 2 hour, which is perfect. Let's extend it down to these belows. Seeing volume here, volume within that, perfect. Volume there. That's validating everything. Nothing's getting invalidated really. Up to these all-time high areas. There, volume there. Yeah, everything looks good with the volume profile as well. So that's perfect. Good to see. Let's go and finally do NQ now. There we go. Let's go ahead and mark this out as well. But if you see, NQ is about to break these all-time highs, and on the 4 hour, there's nothing really stopping it per se yet. We do have this 3 hour, which we haven't tested yet, so keep that in mind. Yeah, this 3 hour down here. Actually, I'm just gonna go ahead and mark down to those lows. It doesn't hurt to do so. I'm gonna do the same here. But yeah, nothing's invalidating our information on ES yet. Let's just keep marking out. I'm not really seeing anything. This is just pretty simple technical analysis. Not walking through this because it's essentially the same thing we talked about here on ES. Don't want to bore you guys. But yeah, honestly, NQ is simply confirming that fact even more. I'm definitely looking to see, I mean, depends on how we react at this level once again, right? Because from how it's looking right now, it does look like we may be making a reaction, but we're retracing straight to that view up level where black pool orders may be placed, and that could result in a move forward. So I'm expecting something of this nature. Or hold on, let's just mark it from here. Let's just do this. Let's see these all-time highs. Or we can head down to this general region and see how we react there. I would most prefer the upside. That's my main one. Like such. So yeah, it basically just confirms what we got down on ES here. One more thing, let's just see where the VIX is sitting at. And as we see, we're coming back into that 14 and 15 level, like from 14 to 15, which has been a key area where price has rejected off of. If we head down more, the higher probability will reject, but this area has been pretty significant. We did make that rejection off of it, like we talked in one of our pre-week analysis, maybe 1 or 2 weeks ago. But yeah, that was definitely something we analyzed and actually predicted and got right. But here, we are approaching that level again, but we haven't hit it yet. So what I'm expecting to see is price to head lower on the VIX, which does mean that price on ES and NQ heads higher, which does happen to go ahead and confirm our bullish bias for this upcoming week, expecting that price is going to go on to break these all-time highs if we are able to break this upper liquidity here. And yeah, that's basically all I have for the pre-week analysis for this upcoming week, August 11th to August 15th. But let's talk about this past week. So what we've been doing this past week is taking a lot of different trades, and we've actually succeeded in a good amount of our trades. But let's go ahead and see what we struggled on. And I'm gonna open my trading journal on my other monitor. And I'm gonna go ahead and mark it out here on TradingView what I noticed that we may have potentially got wrong. One thing that did put us down on the week more than it should have, slippage. One break-even trade that we actually put our TP one tick into profit stopped us out for -4 ticks, -5 ticks total. Which on a mini contract, it can start to add up, especially as the slippage levels add up. But it's just these things happen and they're rare occasions, but they do happen, and when they add up, they can hurt. But there's nothing we can really control regarding that. But let's see about the things that we can control. Uh, 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 uh. Okay, one thing that we messed up in the start of this week. We TP'd before our TP hit. So essentially we exited early. And when we did this, we lost out on profits. And when we lose out on profits, what that makes us do is we get mental fatigue. So how do we fix that? We can fix that by hedging our position by placing a break-even stop loss or even stop loss in profit. Once we have done these stuff, I know it's messing on the screen right now, but once we have been able to do those, it really should not be that mentally fatiguing. Even if it does go back to hit your break even or stop loss in profit, that's okay. we're not trying to predict these exact reversal points. We're trying to predict how capital will flow through the market and how that will result in the movement that the market makes. And those types of things can shift very quickly, especially with a lot of unknowns into play. But that's why hedging by keeping our stop loss break even or in profit can help manage that downside risk. Like, realistically, would you rather have 10 trades, 7 wins, and 2 losses? Or would you rather have 5 wins and 5 break even? Although it might seem like the first option with more wins actually seems like a better option, depending on other types of statistics like risk to reward and other factors, typically the second option where you make 5 wins and 5 break evens typically works out better because those 2 losses can take out 1 or 2 trades. Or better example would have been 6 wins and 4 losses or something of that nature. But yeah, but you get the point. We should always try managing our downside risk. If we want to take profit early, instead of TPing early, I think what we should do is move stop break even if there's not anything to place there. We should just move it simply so we're managing our downside risk, especially if there's a moment where we want to exit early if we don't see a good sign. I mean, there's some times where we're iffy about exiting early. If we're iffy, then I would stop loss break even, not TP early. Even if you could get a bit of profit by TPing early, by stop lossing break even, that will reward us when our iffy moments are actually iffy and the price goes in our way and hits our full TP, because that full TP will make up for any of these break even stops that we make along the way. And this will ensure that the portfolio equity curve in the long term will look something like this, with some break-even losses, some losses, but overall, if you zoom out, it's a pretty straight line instead of an equity curve somewhat like this, right? Where you have your losses, you have your wins, you have your losing streaks, you have your winning streaks, and then it eventually balances out to make the same P&L, but your risk-adjusted reward is not the greatest. And you can make this better by keeping your stops break even. But yeah, that's one thing I noticed by looking at my journal. Let's see what else. Don't change it. Okay, one thing. If we miss out on trades, and if we feel like forcing a trade, we should never enter a trade if the entry is not the greatest. Like, for example, if the market moved after making a reaction which we wanted to enter in but were iffy, and it actually went on going our way, we shouldn't enter off a move that is very extended from our actual wanted entry spot, simply because that will put us in a bad risk reward. Remember that the market will always present new opportunities. If we miss one or two that we're going to take, that's not really going to hurt us. That will only benefit us, because if we get in too extended and we have to place the big stop, if it does turn around, then it's gonna hurt. And with like a 60 to 75% win share, 1, 2, and 4 are going to do that, and when they do that, it can hurt your P&L quite a bit. So definitely would avoid chasing a trade if it does go out your way. That's another thing I noticed. Let's see. And yeah, some good things that we did this week were utilizing the entire range and putting ourselves into an area we, like ICT traders would call it, we created a PD array and wanted to enter when we are in the discount area instead of the premium. And that just simply helped us to catch better entries and simply just succeed a bit more because our entries are in a more value area, and with supporting confluences to that, that can make it have a higher success rate. So definitely continue to use these technical analysis things as additional confluence to these order flow things. If those two line up, then you're in the good. And when I mean in the good, you're not going to win 100% of your trades, but you will have a higher success rate if you execute and integrate properly. But yeah, other than that, that's going to be the main things. And also, on Friday, we did not do the best. We did take 3 trades, and all of them were losses. So Friday was not the best day, but we did manage our risk decently well. We could make up for all these losses in the last week within 1 to 2 W's. So that should be completely fine. If we and I think that once we've taken 1 to 2 losses, we end the day there. 1 to 2 losses are gonna be max in one day, or 2 losses. I think if you take 2 losses in one day, we should end it. And yeah, that's gonna be essentially my pre-week and post-week. Post-week for the last week, pre-week for this upcoming week. For pre-week, the quick summary is that we're expecting and wanting price to continue heading higher, breaking these all-time highs, but we may see a retracement before we do that. These are the preferable outcomes and the things that we might see happen, and if any of these things happen, we should be able to capture a piece of that movement. Regarding our post-week analysis from last week, we need to have a 2 loss daily limit. Hedge risk instead of early exit, and then use larger time frame perspective as key order flow correlation confluence. Those are going to be the 3 things I'm going to take away from this last week, and I'm going to go ahead and end this video there. I think we gained a lot out of this 33-minute, 34-minute session. And yeah, if you have any questions, feel free to leave a comment down below, or please just go ahead to join our free Discord server. The link is in the description down below. Everything is completely free, and I truly believe you can get a thing or two out of it, whether that be through meeting great individuals or learning from us, asking questions, whatever you need. All for completely free. Additionally, if you want to check out the order flow tools which I use on a day-to-day basis, Addis and Bookmap Live, those will be linked in the description as well. Regarding Addis, it's been one of the best tools that I've used regarding order flow. Has a lot of free functionality and very user friendly. The UI on this is very easy to set up, very easy to use, and yeah, I personally recommend it, but as always, do your own research. And yeah, that's essentially where I'm going to leave off this video. I'll see you guys tomorrow morning for pre-market live, and later tomorrow for market analysis session. I don't know if I'm going to take any trades tomorrow. I'm going to try not to force trades or keep it that 2 loss daily limit, but we're definitely going to come into this week with a fresh mindset, use what we learned from last week to come in this week strong. So I'm excited to see you guys there, and goodbye.